After losing thousands of dollars of my real money, learning the hard lessons of tradings and all the emotions that come with it, I finally got funded on Topstep, as you can see over here. And I did it in 3 days, which was a bit of a coincidence because the setups were very clean and I risked quite a high amount, but I'll get to that later in the video. This is a real Topstep funded account and I want to show you how I exactly got here and I got funded and why most traders don't even make it past this phase. I did not get here by gambling or oversizing or going for crazy trades. I got here because I lost a lot of money of my real money and that taught me the right lessons, and that's how I was able to trade this like it was actually my own money. So in this video I'm going to go over my journey a little bit and talk about the rules and the mindset shifts that I had to take to eventually be able to trade like this and pass the Topstep funded challenge. So make sure you stay until the end of the video to know what helped me get to this point and all the tips that I had to learn from other people, and also making the mistakes myself to then eventually get to this point. So let's get right into it. So as you can see here, I'm on the S&P 500 and that's what I do. I'm an order flow trader on the S&P 500. And as you can see, here's my live funded account. And I'm a trader that spends years messing up and making the mistakes and not knowing why, but then eventually setting some certain boundaries and rules that actually got me more profitable, more consistent. And one of those is what's very important in the Topstep or in the funding game in general is risk management. That's one of the most key rules or tips that I can give you that helped me get to this point. And that's what I want to say, that funding or getting funded is not really the goal. It's the mindset that gets you there that's actually the goal. And that mindset of following your rules, following your risk management rules, sticking to your setups, not just doing one trade just because it might work one single time. You have to be able to do it 100 times and then have a profitable win rate on that specific setup. So all of those things, which I'll get into in a bit, they're the most important thing that you can have for getting funded and also for further in your trading journey when you want to trade live capital. So the reason that I actually started with trading real money is to learn the actual hard lessons of trading, which all involve emotions. And those emotions can be the death of your trading career, you know? So all those real trades that I lost with real money and not on prop money, I felt the fear of entering a trade when I just didn't want to lose the money. I was uncertain about the trade that it would work out and I didn't want to lose the money. So that's that fear. And once you lose, you actually respect the losses because you lost your hard-earned money, and you learn to wait for the right setups that you know that have a big chance of working out. The probabilities are there, and that just teaches you to wait for the right setups, have the patience, respect it if you lose, that you're just wrong on your analysis and not because it's just a random setup that you think might work out once in a while. And it also helps you learn to not overtrade because you're trading real money. If you overtrade and you lose 10 trades in a day, well, you might be out a couple of $100, and that's something you don't want to do when you're trading real money and just in general. But starting with real money is what taught me all these very important, crucial rules for trading to actually have longevity in the game. And I traded over a year with real money. And now I finally felt ready to start on the prop firm space because I feel like I had the rules set down in my mind. I knew what I wanted. I knew how to trade. I knew how to control my risk. And that's why I eventually stepped in the prop firm space now and got funded. But I think it's very crucial to have these rules set first, and I think it's more difficult if you start doing it with funding from the jump. If you start with funding and you're trading fake money, just a $60 account, well, it's going to be more difficult to respect those losses, feel that fear because you're only trading with $60 and you have more potential to the upside because if you get lucky once in a while, you might pass the funded challenge. So I trade the evals or funded accounts exactly the same. I'm trading it like it's my real money. I take it slow, I win slow, and that was got me funded. So I put some rules here now in the middle of the screen, and these are the most important rules that I used to actually get funded and the overall mindset about how I go about my trading. So the first one is survival, and that's basically what trading is. You have to survive, you have to protect your capital, you have to know your setups and be confident enough in your setups that you can use them in the long term. And that together with risk management, with protecting your capital without over trading, with all that stuff, that's what's going to keep you in the game for a long term. And that's what you need in trading. You shouldn't oversize because you're extra confident for some reason in a trade. You should always keep fixed risk, which is the second rule, but that kind of ties in together with survival. You shouldn't overtrade or oversize. You shouldn't really oversize on certain setups because you think it might work out or you've already lost one on that specific setup and then it gives you another entry and then you oversize because you want to make that money back. You shouldn't do that. Keep your fixed risk or even lower risk if you're in a certain situation. But I would always keep a maximum risk and never go above that, whatever you're comfortable with. Me, for example, on my funded evals, like when I tried to pass a challenge, the maximum drawdown is $2,000. and I usually risk per trade in between $250 and $300, which gives me between 6 to 8 losses before I lose the account. But I know my win rate is around 50 to 60%, and that just allows me, okay, maybe I lose 1 or 2 trades, but the next one I'll win, and usually my average R is around 3. So that allows me to have more room for losses as well. Then again, what I said as well, if you lose maybe a setup and then you oversize, that's basically revenge trading. You should not ever do that. That's like the worst thing you could do. So a little bit oversizing and revenge trading goes in hand, and that's something you have to control, and you have to just put it out of your mind, put it on a note, stick it on your monitor, and that's something you should really stick to, because if you cannot control that, you're going to keep losing challenges and you're never going to have longevity in the game. That's at least what I learned for myself, because I have done the over trading, I have done the oversizing, and it might work once, but it's not going to work 50 times, So it's something you got to be consistent in. Then the third rule is a no trade is also a trade. So if there's a day where the market might be very balanced, very choppy, and you're not really have a setup for that, a no trade is also a trade. Like, you don't have to trade every single day. Traders are not getting paid to be active in the markets. You're getting paid to be right in the markets, and once your opportunity is there, to jump on that opportunity and take advantage of it. That's what traders do, but you don't get paid to be active every single day, doing 3, 4, 5 single trades a day. You're getting paid for what you know, your knowledge, your patience, and once your setup is there, to then attack on that specific setup. And if you're right on the setup, well, then you're going to get paid, but you're not getting paid to be active and just pump out trades every single day. So that's one very important thing as well. If your setup is not there, if the market conditions are not there, which is happening a lot recently for me as well. If the market is very slow, the setup might be there, but just the conditions and the overall volatility in the market is not so high. I just stay away from it, and I wait until the conditions get better and I see the conditions that I like to trade in. So that's one very important rule as well, to not want to trade every single day. This is the fourth rule, is something I struggled with a lot in the beginning of my trading journey, especially with order flow, because it's so easy to just jump in and out of trades. Because if you don't really know what you're looking for, everything on the order flow can be an entry signal. If you look at the book map, everything can be a short, a long. You can get very sucked into the whole order flow, and once you're there and you're like actually looking at every single bubble that's coming in on the book map, you can just enter 1,000 trades in the span of 10 minutes if you want to. So I struggled with that in the beginning as well, and that's when I started putting a max dollar amount, which is, I don't know, if I'm risking $250, I might put $500 that I want to lose max per day. So that's basically 2R. I want to lose a maximum of 2 losses in a day, 2 trades, and that helped me building that patience and that confidence to just wait for my setups, wait for the right confirmation, because if I don't and I hit that limit, I'm out of the trade and I'm blocked out of the program for the rest of the day and I can't trade anymore. So if you're struggling with that as well, put that maximum loss limit per day and just have it every single day active. If you're struggling with over trading and you say like, oh, I lost twice already, but this setup looks good, let me just take one more setup. And if you lose that one, that's going to spiral into more and more losses, and you end up with 10 losses on a day. And that happened to me as well. So my advice is set that loss limit, and that's what really helped me as well. Build that confidence and that patience to just wait for the right setup and the right condition. And now I don't set that rule anymore, like the actual block for the account, because I have it in my mind. I don't need it anymore, but I definitely use it for like 2-3 months, and it really, really helped me. And the last rule that I said is boring. Trading should be boring. You shouldn't be like excited when you win a trade. Like, it should be, the process should be boring. Like I said in the beginning of the video, it's a slow grind, and the profit target is closer than you think. Like, it's just $3,000 if you're risking like 0.5% per trade, like $250. Like, if you have a 50K account and you're risking 0.5% per trade, which is $250, and your average RR is 2 to 3, you only need a couple of good trades to actually pass the challenge. And if you're just patient enough, you might pass in 2-3 weeks. If you take a couple of good setups and a couple of losses a week, will pass the challenge to 2 to 3 weeks. But just don't expect to pass in the first week and 2 days like the best results you can have. Take it slow, make the process boring, so that you can have that process for every single challenge in the near future that you're gonna try and pass. You can just repeat the same process, the same rules, and you know what works. It might look and it might feel boring, but that's what trading is. But if it feels boring, I think, and personally, that's what gives you the profitability, and that's what can help you get in long term to more payouts, because it's not just passing the eval, that's the first phase. But then you need to keep that consistency of risk management, of not over trading, of following your rules, of waiting patiently for your setups to then get those payouts that you want to get to. So that whole process is all the time exactly the same. And it is boring. But once you get that payout and the next payout, that's not going to be boring. That's changing our lives. So the process might be boring, but the reward and just you knowing that you're following your rules is not going to be boring. It's going to be so satisfying that you know I did what I had to do and it worked out and it paid off. And that feeling is unbeatable, in my opinion. When you know what you're looking for, when you know what you need to do, and you actually do it, and you don't lie to yourself, that's one of the best feelings in the world. So in my scenario, I did pass in 3 days, but that's because I was risking around $300, $330. I was going quite aggressive and the setups were very good. The reason that I passed so quickly because the setups were very high R multiple, like I hit a 5 or 6 R, 5.5 R trade. Then I hit another one of 4 R. Then the last one was a very small win. So that's just a little bit of a coincidence, but normally it doesn't go that well, especially not that quick. And how I will just manage it, everything over time. So make sure you subscribe and drop a like to follow my journey. And that's the video for today on how I got funded. I hope you enjoyed it, and I hope you can take something away of these rules that helped me get to where I am right now. This is just the beginning. I still have a lot to learn. I still make a lot of mistakes every single day, but I have got some rules that got me to this point. So if you have any questions, leave them in the comments. If you have anything that you want to see about my funded account or about the trades that I took, let me know in the comments as well. I'll make sure to get back to you. And yeah, I'll see you in the next video where I break down the trades that got me funded.